All right, guys. Hope you had a great weekend. More earnings for the week ahead. Just jumping right in. So Palantir reports earnings on Tuesday before the bell. So they're currently expecting a move of around 11% in either direction. So upside is around 22, downside is around 18 or so. Here's a chart right here. Obviously, we've been bouncing between roughly 20 and 25 for the past few months. We had a nice spike to 45 back in late January, early February. And it's probable we're going to see, I think, a greater than expected move in this case, just because I believe the options market is underpricing the move in this instance. So I'm inclined to think we see a move down to around 17 or move up to 23-ish in other direction, right? So $3 or so move. A straddle might not be a bad idea to take. And again, keep in mind that they report Tuesday morning. So tomorrow there is still time to take action on a trade. That would be obviously buying the at the money call and put for Friday OPEX. So if I pull up the option chain right here, we can analyze that. Looking at the Friday OPEX, which is May the 14th. Again, trading short-term expiration contracts is very risky. So if you are doing so, do so at your own risk. Remember that you can lose whatever you put in, obviously. And right now, the expected move is around 220 in one direction. So with that in mind, if you were to buy that expected move, so you were to buy, for example, the at the money call and the at the money put as well, then you would need a 220 move or greater in either direction from 20 bucks to make a profit, right? That's why I said, I expected to push by 23 or down to 17, kind of like last week how Rocket, RKT, their expected move for the week was only about $2 in one direction. They closed at 23 prior to their report. And what happened? They fell down to 18 bucks. So the actual move was $5, right? Whereas the expected move was $2. So anyone who bought a straddle would have made 150% return on that particular trade, right? I think we have a very similar setup here with Palantir in that the market is underpricing the move. And obviously Ivy will come down after earnings, but we could see a big pop or a big drop. I'm inclined to think we're going to see a pop because we're pushing that support area right now of 20. And it sold off pretty heavily the last couple of weeks, right? Keep in mind, we were at 20 bucks roughly 2 weeks ago, right? Or sorry, 25 bucks or so, two weeks and change ago, right? So keep that in mind as well. Now, looking at other reports, so we also have reporting this coming week. Tomorrow we have Virgin Galactic after hours. Again, I'm not a big fan of them right now, just because management has sold off a lot of shares. Richard Branson and Chamath Palihapitiya both sold off a lot of their shares. But looking at it for the week ahead, the expected move is roughly 230 in one direction, roughly. Right? So either up to 2230, down to roughly 1770, right? I'm inclined to think we're going to see downside. I don't really see how they can spin a positive report. They've delayed their launch. If you guys recall, they were supposed to do a test flight back in October of last year. We are now in almost mid-May, right? They are just delaying it over and over again, and I'm not sure if they're ever going to even have a test flight at this point, right? So I think we see downside around 15, maybe even down to 10, perhaps. I would stay away from the stock, and obviously, if you're trading it, trade it knowing that it's full speculation right now, right? Otherwise, reporting this week as well is Roblox, RBLX. It's their first public report, and their expected move for the week ahead right now is approximately $7 in one direction. So from the current price, roughly upside of 75, downside of 61 or so, right? Looking at the chart, we can see the range. It doesn't have a long history, obviously, keep that in mind. It started trading in early March, and the range has been upside of 82 and change. Downside has been roughly 60 or so. So obviously, we can see downside of about 60 and upside of 75 or so after they report. They report tomorrow after close, right? So keep this in mind as well. I'm not playing it myself. I don't know too much about them overall. They're not on my watch list, but someone mentioned it, and I thought I'd look into it as well because they are a fast mover. Right now, analyzing the option chain, the put to call interest is 0.47, meaning that there are roughly 2 calls outstanding on the open interest per put outstanding. So that's pretty bullish overall. from a sentiment standpoint in the options market, again, I'm inclined to think we see an upside move, but anything's possible with this market right now. And the last month or so has shown us that these high flyers get crushed regardless of the news, right? We've seen Palantir come down. We've seen QuantumScape, the EVs, NIO, for example, Tesla come down pretty handily. Overall, AMD smashed earnings. They came down as well. Actually, I want to touch on AMD as well, right? So AMD, they don't report this week, but they had a nice little curl up on Thursday and Friday last week. We wicked down to that 76 area. And I'm inclined to think that we see upside now to 85 or so in the next couple of weeks, right? They had a great report 2 weeks ago, and they were at almost $90. They've only fallen since that report, right? And they are pretty fairly valued overall with respect to NVIDIA, for example, in that their price to earnings ratio is much more reasonable than NVIDIA's. Like, so just for perspective, if you want to analyze this, NVIDIA current market cap, $360 billion, net profit, 4.33 billion, sales, 16.68 billion, right? Price to earnings ratio, 86, forward price to earnings ratio, 38, right? Now you look at AMD, market cap, 94 billion, net profit, 2.88 billion, so roughly a billion less than AMD, but they're worth, less than a third, and sales, 11.42 billion, right? Right now, the PE of AMD is 33 versus NVIDIA's, which is 86, and the forward PE is 29 versus NVIDIA's, which is 38. So right now, AMD is roughly valued at a third of NVIDIA, even though they're doing very, very well. Again, not the same level of revenue or profit, but they're very close, and they're worth less than a third of that of NVIDIA, right? Keep in mind, again, NVIDIA is worth $360 billion and AMD is worth $95 billion, right? So I'm inclined to think we see a divergence of price of some sorts where we see AMD climb handedly over the next few years. And that would probably start pretty soon, given that they've been in this very tight range. If you notice over the last 1 year period, they've been in this very tight range, pretty much bouncing up and down between roughly 75 or so and upside of about 95, right? Obviously, recently it's hit a high of around 90 or so, but the absolute upside has been about 95, and the all-time high was at 99.23, right? So my thesis is that the longer we consolidate in this range, the sharper the breakout will be when it occurs. And that can happen at any time, right? We might see a run all of a sudden akin to the one we saw last July, where it pushed from 55 up to a high of 87 or so. That's very possible, right? And should that occur, I think we'll establish a new range between roughly 100 and 125 or so. And my thesis is that over the next couple of years, you're going to see AMD push into the $200, $300 range, kind of like NVIDIA did a few years ago. So if you look at NVIDIA's chart, here it is. I'll show you what I'm comparing it to, right? So you can see that 5-year chart. So NVIDIA consolidated for a while in this little range, and then it broke up handedly right over here. And again, consolidation occurred between 500 and 550 or so for most of the past year. They broke above to 650 recently, came back down, but they're on the way up again. Two very important companies, right? And NVIDIA was only about $44 back in 2016. Now, obviously, they're 650. But you can see that after consolidation periods, they broke up higher and higher and higher, and they established new highs, and they never looked back at all, really. Right. So I believe AMD will follow the same kind of pattern in that, 2-3 years out, you'll see them trading, between 200 and 300 bucks a share. And that starts with a breakout from the current range above 100 or so. Right. So I think we're heading in that direction, and it's very, very close to occurring. So keep an eye on that. Obviously, I play longer term versus shorter term, because short term anything can happen, but longer term, I see the trend as being up and up. Right. Other names reporting this week as well, in terms of names that people watch in our group, there is Jumia, which is it's JMIA. They're kind of like the Alibaba or Amazon, if you will, of Africa, and they've pulling down heavily from their $70 top back in February. They're now 26 bucks and change. Again, that's roughly support of the previous high at from August 4th, 2020, which is about 24 bucks or so, right? But right now, the expected move on Jumia for the week ahead is, let me just check one sec. Here's the option chain. So for the week ahead on Jumia, expected move is roughly $5 in one direction or so. So upside 32, downside 22, right? Again, this is a higher growth company right now, kind of akin to Mercado Libre, right? Which is the Amazon of Brazil, right? Again, that company's done crazy well. Here's a chart of Mercado Libre if you want to see it. Let me just pull it up so you guys can see. It's MELI ticker symbol, right? So here's a chart on Mercado Libre, right? Over the past 5 years, it's gone from like 130 or so to peaking above 2000 recently, back down to 1480 or so, right? And if you go 10 years out, you can see that they were much lower. They were around 58 bucks or so back in 2011. But Jumia could be a similar story longer term, right? Again, they are, from my understanding, the only platform where you can buy legitimate goods online or authentic goods online in Africa, right? So interesting play to look at. I don't really trade them myself, but I know people in the group do. So I just mentioned, I thought I mentioned it, right? Otherwise, reporting this week as well, we have more volatile names. We have Fubo TV as well, right? That's ticker symbol FUBO. And they have, here's the 1 year chart, right? So they had a high of 60 bucks or so back in December. They've since fallen down to what, 17 and change. They're right near the support area of roughly 15. And right now, the expected move for the week ahead is, one second, roughly $2.70 in either direction. So upside of around 90, upside of around 20, downside of around 15 or 1450 area, right? Again, not a lot of people trade this in the group. I know a few of you guys do, but interesting trade because they should move pretty handily, and they've seen a lot of downside recently. You might see a similar move to what happened with SKLZ, right? So a few weeks ago, SKLZ sold off sharply. Here's a ticker symbol right here, skills. So they sold off pretty sharply down to 1250, and they bounced back to 20 or so, right? So you might see a similar move in Fubo, wherein they've pulled back pretty heavily. You might see a pushback above 22 or so in short order, right? Especially with a decent report. Otherwise, there are a few other recent like IPO names like Lemonade, Upstart, Open Door. They're reporting this week too. There's QuantumScape as well. I won't go over every name because there are too many to cover and not enough people will really trade them for it to matter too much. One name that I do like a lot is Wix, right? So Wix is very similar to Shopify, but they're valued, again, kind of like the AMD NVIDIA analogy. They're valued at a fraction of the valuation of Shopify, right? So here's the 1 year chart on Wix. Just some numbers for you guys to look at quickly, right? Shopify, current valuation, $135 billion, net profit, 1.6 billion, sales, 3.45 billion, right? Wix valuation 15 billion, so roughly 1/10 of that of Shopify. Net loss right now, operating at a net loss of 165 million, so that's not good, obviously, and sales of 1 billion, right? So they have about a third the amount of sales of Shopify, obviously operating at a loss, but they're valued at 1/10 that of Shopify as well, right? So interesting to look at Wix versus Shopify because they are in a very similar business, and they report this week Wednesday prior to market open. Yeah, keep an eye on them. The option chain isn't very liquid, so not much to do there. But again, if you're trading Shopify, you might think about perhaps diversifying into Wix because it's a better valuation, in my opinion. Obviously, I think Shopify is one of the most overvalued companies in the entire market right now. Right. Next, we have Alibaba. And Alibaba reports on Thursday before market open, right? Now, I mentioned them on Friday. They're trading near that 220 area of support. This is a pretty heavy support area right now, right? So we have support at 220, 210, and 200. I would love to own Baba at 200, right? I think they have upside, obviously, to above 300 pretty easily. And I think they will hit 300 at some point in the next year as well, right? So the actual price and move for the week is about 4.4%. So upside is around 335, downside is around upside is around 235, downside is around 215. So a $10 move in either direction is what's expected right now. But I think we can see a move similar to what we saw a few weeks ago when it popped from 221 to 240 and change. So I'm inclined to think we're going to see again a greater than expected move, kind of like with Palantir, right? The market may be pricing in too low of a move in this instance, and I think we hit either 240 or perhaps as low as 210 or so in this case. Obviously, if it hits 210, credit put spreads, a month out or so might not be a bad idea to capture some premium there. Obviously, that'd be similar to doing cash secured puts, but the only difference being that you're tying up less margin because you're using spreads instead of just being naked on the cash secured put, right? Yeah, so I do think Bubba hits 240 or 210 this week, greater than expected move, which is only $10 or so. So I think we're gonna see it move at least $15 in the direction. And I'll probably be playing this week as well. I'll probably be buying the June contracts instead of buying the weeklies, just because I want more time to be correct in my thesis. The IV isn't crazy high right now on Bubba for earnings either, so that's an interesting point to make as well. You can see again, I'll pull up the option chain right now. So you can see right now that the IV is only 30.5%. Historically, it's about 31%. So we're trading actually below the historical right now. That's kind of rare for Alibaba going to earnings right now. Put to call interest 0.77. So not crazy bullish, not crazy bearish either, right? And yeah, I mean, if you want to take a decent trade setup, going a couple of weeks, perhaps, using spreads isn't a bad idea either, right? Like for example, you could do a at the money call option long, out of the money call option short. For example, you can do like the 235 short, long 225, and you're risking only about 370 or so, 375 here. Maximum profit would be about $6.25, right? So your break even would be roughly 331. What am I saying? $300. Your break even would be 228.75 or so, right? So that's how I would play it. Obviously, if it pulls back down, I'm inclined to think about selling cash secured puts roughly at the 200 mark. Obviously, I go 2 months out or so and do spreads instead. I might sell, for example, the 200 strike over here, and I might buy, for example, the 190 strike or the 180 strike. 190 strike, for example, right now you're getting about $1.50 credit or so for maximum risk of $8.50, right? Not good asymmetry of risk, but very high probability of profit, right? Alternatively, if you want to play Bubba this week and trade the Iron Condors, that could be a pretty profitable trade too, because again, I do think it's gonna move more than expected, but it may not move below 210 or above 240. So in this case, you might look at, for example, selling the 210 put, buying the 205 put, and then selling the 240 call and buying the 245 call. You only get about roughly 85 cents credit in this case, maximum risk 415, but your maximum profit occurs as long as Bubba stays between 240 and 210 on expiration. I actually did that wrong. 1 sec. That's better, yeah. So you would actually sell the 240, buy the 245, and sell the 205. Sorry, sell the 210 and buy the 205, right? Now that's for Alibaba. For the rest of the week, we also have XPeng Motors reporting too, Airbnb, Disney as well. So a fair number of big names reporting as well this week. I'll go over Disney this week as well because they are a decent stock to trade and also own longer term. Support right now has been at around 180. I'm pulling the chart right now so you guys can see it, right? Support pretty good at 180 right here, right? We tapped it last week on Thursday, bounced right off of it, and we are at 185 again. Again, Disney Plus is killing it. The theme parks are reopening. Pretty soon we're gonna have theaters reopening as well, and Disney will be firing on all cylinders, right? I do think we're ready for a next move up to around 200 and perhaps 210 or so in the next few months. Looking at the expected move for the week ahead on Disney, we have an expected move right now of approximately for 1 week out. We have it for about $8 in one direction. So upside of around 193, downside of around 177, right? I would prefer to play it longer term. Again, if it pulls back, any pullback is a very viable dip on Disney. They're a great company to own, and I would love to own them at a much cheaper price, obviously. But if you want to play upside on them shorter term, you can go out a month, for example, use call spreads. Again, the IV is much higher than normal right now. You can see this right here, right? IV is 28% or so. The historical is about 20%. So right now, you don't want to be buying calls or puts on their own. You want to use spreads to offset your risk. I would say that, for example, if you're bullish, looking at the 190, 200 call spread isn't a bad idea. You have about 3-to-1 risk reward. You're risking about 250 or so to make maximum 750, break even 190, 250. Obviously, if you're bearish, do the same kind of idea. But I would say to hold off if you are bearish, maybe wait for a decline after earnings if it does pull back, and then sell some cash secured puts or even put credit spreads instead, right? That might be a better way to play it. So again, they report Thursday after the bell. That is a pretty interesting setup because Iron Condors are typically great setups for the Thursday after hour report because you only have 1 day till expiration on the move. So in this case, if you want to play a short-term Iron Condor, kind of like with Alibaba, you could, for example, go to the 175 strike put, sell that, buy the 170 strike put, and then on the call side, look for the 0.1 delta, which is roughly the 195 strike. You'd sell that and then buy the 200 strike call as well, right? Again, you're getting a credit of about 90 cents here. Maximum risk is $4.10 because it can only expire in one side, right? You're selling a call credit spread for $5. Same thing, you put a credit spread for $5 wide as well. You're receiving a credit of about 95 cents or so, and your maximum risk will be 5 minus 95 cents, so about 405 or 415, depending on where you fill, right? It would be more ideal to fill it right before earnings on Thursday prior to market close because IV should percolate right into that event. And again, if it stays between 175 and 195 on Friday, you make maximum profit, right? That's how Iron Condors work. But again, only use these strategies if you understand them intimately, right? If you don't understand what I'm talking about, disregard them. Maybe do some more reading on Iron Condors. They are very powerful strategies to use in certain situations, such as these. But if you're using them incorrectly, you can get burned pretty fast as well, right? Remember that. Otherwise, we have Airbnb reporting. It's their first report as a public company as well. And we have DoorDash too, and that's pretty much it. So Airbnb right now, ABNB. Current price 152 or so. The expected move for the week ahead is roughly, it's gonna be about $14 in one direction or so. Let's call it 15. Upside 167, downside of 137, right? And I'll pull up the chart so you guys can see it. Here's the chart. So Airbnb has traded in this range between pretty much 150 and like 210-ish. Again, with the reopenings of the economies globally, we might see some upside revisions in terms of their estimates for guidance. So that might be a catalyst to the upside. They are still very overvalued, but again, they are a pretty interesting company overall. I'm not trading them myself, so I won't give any commentary there, but be aware they report Thursday after close. Also is DoorDash. They report Thursday after close as well. They had some interesting news a couple of weeks ago along with Lyft and Uber from the I think it was one of the people in power in the US mentioned that anyone working for Uber, Lyft, or DoorDash should be considered employees, and stock price sold off heavily, right? So you saw that it moved from around 164 down to the current price of 125 or so. Obviously trading near lows, but DoorDash is very overvalued as a company. They're not producing a profit. They've never been profitable ever. Current valuation is like $40 billion. Sales are 2.9 billion, and they're operating at a net loss of $460 million. I'm not inclined to buy this dip at all. I don't like the company whatsoever, but again, they report Thursday after close, and that should be an interesting move as well. Regarding the broader markets, we saw nice moves on SPY and the Qs on Thursday and Friday last week. A nice recovery on that lackluster non-farm payroll report, which came out on Friday. And the reason why the market rallied on that information, you might wonder why the market would rally on less than stellar news on job creation, right? The reason being is that news could be used as fodder for the Fed to decry raising rates early, right? They might say that job creation isn't very good right now. We're going to wait and see what happens in the next couple of years and wait to raise rates, right? Again, obviously inflation is a concern right now. We're seeing gold actually percolate as well right now, but Friday we closed on SPY at all-time highs. So there's a gap to be filled at around 400 on SPY. That should be filled, I think, in the next couple of months. But again, we're running pretty hot overall. A lot of big companies reported a few weeks ago. They had great reports and they pulled back. Microsoft, Apple, AMD, among those, and that would be a catalyst to the upside move, I think, in the market as a whole. If Apple and Microsoft and other big FANG names can push all-time highs, that'll push the market higher as well. One name that I think is going to get hit very hard is Facebook, because Apple's new policy built into their iPhones where they ask users if they want to be tracked on certain apps has kicked in. And on Friday, I read a report saying that 96% of people opted out of being tracked, which means that it'll be very hard for Facebook and Google to provide personalized ads on iPhones, right? Google has one solution to that because they have the Chrome application on mobile. So if you're using Chrome at all, they can track you there. But Facebook has no solution to that whatsoever. So Facebook's trading at all-time highs right now. I think we're going to see a pretty heavy pullback in the next year or so, because I don't know how they're going to get around the issue of ad tracking. If you can't provide personalized ads, it's impossible to track the efficacy of advertisements for small mom and pop businesses that are paying for Facebook ads, right? Like if I'm paying for an ad, for example, I want to be able to track analytics. And if I can't track analytics, how do I know if it's being effective or not, right? So I do think we're going to see some downside in Facebook. Not a fan of the company overall. They're very profitable, but I'm not a fan of what they offer, just from an ethical standpoint overall. I think they're a big waste of time, but that's my own personal opinion. Keep an eye on them for some downside over the next year or so. That would be my commentary on Facebook. Otherwise, looking at the triple Qs before we finish up the session, we had a nice big push up from Thursday, Friday last week on the Qs. Had a little doji, and now it's possible we see, given that futures right now are up, I believe. Let me just check again to ensure that's correct before I put it in stone in this video. 1 second, let me just check. So for futures right now, yeah, Nasdaq is up about 0.22%. SPY is up about 0.25, and the Russell up about 0.33. So Nasdaq should see a push up tomorrow again as well. And I would say that we'll probably see all-time highs again in the next couple of weeks, maybe in the next week even. It moves up pretty fast, right? That being said, trade cautiously. The market is near all-time highs, and a lot of things are very overvalued. What we've seen in the last few weeks has been a pullback on most of these speculative names like QuantumScape, Neo, Palantir, right? A lot of names that are richly valued right now based on future projections, right? So potential. We also seen pullbacks on the names of like Apple, for example. Even though they had phenomenal reports, like Apple, for example, they reported over here. They hit a high of 137, pull back down to a low of 127 and change, and now they're at 130 and change again, right? I think you're going to see a nice push up to all-time highs on Apple by July OPEX, right? So that's my bullish thesis. I actually own the 130 calls for July OPEX right now, and that's my overall thesis, is that we're going to see roughly 145 or higher by July, right? If you have any questions or comments, drop them below. If you want to share the video with someone else that you think would appreciate it, by all means, appreciate that too. Have a great week, trade safe, stay healthy, and we'll see you guys next week. I'm going to break off now and do Q&A session.